Hi everybody. Today we are going to see the importance and functions of capital market. There are totally 10 points in it. Let's go through it one by one.
The first function of a capital market is savings and capital formation. So when we deal with capital market, the place of capital market is nothing but a stock exchange. Right? Stock exchange deals with two main points, that is securities as a product, and it provides liquidity. Liquidity in the sense it provides liquidity to investors, that is conversion of stocks into easy cash. So whatever stocks or securities which have been dealt in stock exchange can be easily converted into cash. Because of these 2 points, investors are attracted towards stock exchange. So how do investors invest in a stock exchange? They have to save for it. So investors save money to invest in a stock exchange, right? So that induces the important point of saving. So when the investors invest in a stock exchange, they result in capital formation. So huge amount of money is being invested by the investors, which result in capital formation. So this capital is required by the companies in order to pursue their goals. Therefore, savings and capital formation is the first and most important point of capital market. The second point is permanent capital. So how this permanent capital is going to be provided by the capital market. So when you take a capital market, there are two people involved in it. So the two people are, one, the investors who invest their savings, and two, it's the companies who require the investment as capital for their company. So these investors are going to invest their savings, but one problem what they have is they cannot commit their investment for a particular period of time. So in order to take away this hardship which the investor meets, the stock exchange provides easy opportunities to buy or sell their securities, so that their securities needn't be committed to a particular period of time in the stock exchange. So the investors are going to invest their money, but one hardship or one point which they face in a stock exchange is their money or fund being locked into the stock exchange for a particular period of time, right? So none of the investors would like to have that. Therefore, what they do, what the stock exchange or the capital market does is, it gives an opportunity for the investor to easily buy and sell the securities, right? So because of this remedy which the stock exchange has provided to the investors are encouraged to invest more. As a result, when there are more number of investors keeping on investing in the capital market, there is a huge amount of capital formed. This in turn gives the company the capital which it requires, and it gives them a permanent supply of capital, because the investors are not going to stop their investment in the capital market. The third point is industrial growth. So a capital market is the central market. So it encourages the transfer of resources into industrial sectors, like first of all encouraging the investors to invest in the industrial sector. Therefore, it gives capital resources to the industrial sector. Secondly, it encourages the investors to invest their money into these productive channels like these industrial sectors. So, by doing these 2 points, the capital market thus encourages or increases the industrial growth and economic development of the economy. The fourth point is ready and continuous market. So, the stock exchange is a central place of marketing these securities. So it provides a central place where buying and selling of securities takes place. Therefore, it ensures that there is a ready and a continuous market for these securities. The fifth one is reliable guide to performance of that particular company. So if you take a capital market, it in turn becomes a guide to the company. It guides the company because the company gets its capital from the capital market or the stock exchange. So when the main source of capital comes from a capital market, the availability of capital is very important for the company. Therefore, the availability of capital in the capital market becomes a guide for the performance and the efficiency of the company. The sixth point is proper channelization of funds. So the 3 points which a capital market overlooks is the price for the securities or the prevailing market price for the securities to be given. Next, the yield or the income which the investor earns, and it helps or it guides the investors to properly channelize their funds or selecting their proper channels. So all these three things will result in the effective utilization of funds in the public interest. The seventh point is provision of variety of services. So in a capital market, there are financial institutions who work under them. So these financial institutions provide a set of services for the investors and the companies who are dealing in the capital market. So the first one is they provide grants for long-term and medium-term loans. Therefore, a company definitely would require loans to carry out its business. So they give permissions for long-term and medium-term loans to be taken from other financial institutions. Secondly, underwriting facilities. So if you are going to be an investor or you are going to advertise for inviting applications for subscription, you want to confirm yourself about the subscription of your shares. Therefore, they have underwriting facilities. So there are people working as underwriters who confirm you that there is full subscription of your shares which is given out to the public. So that facility is also being rendered by the capital market. Thirdly, assistance in promoting your business. So if you are a new concern, the capital market assists you or helps you out to promote or improve your business. Fourthly, participating in equity capital. So slowly they will ask you or they will encourage you to participate in equity capital by providing or issuing shares in the equity capital. Fifthly, they provide expert advice in resolving your queries and your problems. Development of backward areas. So how does this capital market develop backward areas? First thing, it's going to provide funds for backward area projects. So projects which come from these backward areas are being funded by the capital market. Secondly, this will lead to economic development in those backward areas. So it develops the backward areas by providing funds to those kind of projects from the backward areas. So long-term funds are also provided for development projects in the backward areas. So finally they are going to give long-term funds for exclusively for developing these backward areas. The ninth point is foreign capital. So a capital market gives access to these Indian companies for foreign capital. So how do they access these foreign capital? In the sense through bonds and securities from the foreign companies. So through these bonds and securities, the Indian company can access a foreign capital. Likely, our government has also liberalized or loosened the policies for foreign direct investment. So since it has loosened the restriction for foreign direct investment, this not only brings the capital of foreign countries but also brings in technology of the foreign country. Therefore, this will in turn, or which is important for our economic development. The 10th point is easy liquidity. So, with the help of a capital market, an investor or a company can easily convert their stocks and bonds into cash. So, capital market deals with two types of market, that is primary, new issue market, and secondary. So with the help of a secondary market functioning in a capital market, investors can sell their holdings of stocks and bonds and convert them into easy cash when and wherever they require. Banks also encourage investors to withdraw their deposits which they have to invest into the capital market and to convert them into easy cash. Therefore, any stock or bond which is being dealt with in a capital market by the investor or a company can be easily converted into cash. This is called as easy liquidity.